Well, hello, folks. My voice probably sounds a little different. Change of season finally here in Atlanta, going from warm to cold. And here we can have 4 seasons in a week. From Philadelphia, where we had 4 in a year. I'm not used to this 4 in a week yet. But nevertheless, glad to be back with you. I hope everybody had a good year. I know we did. Our clients did. My students did. And actually, some of my best trades came from some of my students. They called and said, "What do you think?" I said, "Well, where are you buying it?" I know where I am, just looking at the chart. So we're not always that lucky, but it's good to see the progression I've seen in their education, their bottom line, and their confidence. But today I just want to go over a couple things. We're in the month of December. A lot of volatility. A lot of people thinking about, do we want to stay with the same software? Should I get a new advisor? Should I be more aggressive with my trades, less aggressive? So there's a lot of people thinking about different things when it comes to their financing. We also have the holiday period where those that did very well, I know a few people that are taking the whole month of December off. One student, one client too, told me, I did the best I've done in 5 years, so I'm not going to risk it. I'm going to take a nice 3-week holiday. And he's finishing up Friday. And he said, "I'll see you the first week of January." So the markets are going to be a little more thinly traded. They may not have the volume they've had recently. And a lot of the moves will be sharp. And you may see them reverse before they should. But I want to start off, I've got a chart here with the stock market. Now, I did have that one positive reversal target on the Dow up around 35,641, which we didn't get to for a while, because back here we got to 34,777, and then it wasn't hit until 35, and then backed off, and now started another leg up. And we've been on both sides of that. I call it my number, my target, positive reversal or negative reversal. But when you clear that target, it confirms it's going up. Well, it got up there and then backed off. So 35,641 would be right in here somewhere. And it achieved it. It backed off and now set up another one that looks like 36,582. And we recently got up to 36,565, but we did not close above it. So you can round it off and say 36.6 is resistance. And if you see with the RSI, it's gotten just barely above the 60 level. And then the 9 moving average is turned down. So we had a little bit of throw over and it's turned back. Now we've got this new positive at 36,582. And right now, when I set these targets, they are future potential upside targets that will serve as resistance until they close above them. But the last time it closed above it, it immediately reversed the next day to the downside. Then recently we dropped below it and came back to support and created another one. So 36.6, I would be very patient. And I strongly suggest that you tighten your stops on stocks. If you're trading the indices, or really any market, put protective stops in. These markets can get very wild in December. I've had a lot of people call me, email me, say, "Thank you for a great year." I said, "Well, you enjoyed it and you did well. So relish in the fact that you did do well. You followed your rules, but you also played more defensive and protected your assets, because this is all in the midst of COVID and everything else that's going on. And now we have Omicron or Omicron. That could be a variable, create more volatility. The crude oil came off. Our target up there was 84 and a half, and we got up there. When we did, we had a sharp sell-off. But I think I'm still positive on crude. This was just a good size correction, and we're probably going to see over 100, 110, maybe even by the first quarter. This chart's very positive. This target down here is 60.23. 66, that's about a $6 move. So add 6 to 83.84, saying 90, and this is a weekly chart. So I think we're going to still see probably over 100 in the first quarter, if not 110. Everybody's talking about inflation and what's going to be, and this week it might come out to 7%. We haven't seen those inflation numbers since the late 70s. And I remember seeing those numbers. I was just starting. So I got my teeth cut on some of the greatest volatility, seeing gold go from about 300 to 875 and silver from $3 an ounce to over 50. I think we could see the same thing. I've been bullish on inflation for a while. I have not changed my opinion. The commodities, I think, will outperform stocks. I think stocks in general are very overinflated. Today's Fed meeting or Fed minutes or something is going to be announced. And the inflation numbers being released Friday could have a major reversal develop in some of these markets. 7% inflation is nothing compared to the stress that it's going to create on the average consumer. $110 oil, coffee, which we've been bullish pretty much since last summer, at around $1. We're talking about $1.50, $2, $2.50. We broke $2.50 the other day. And I think it's just experiencing a little pullback, but is eventually going to work higher. We're into Excel mode with the moving averages on RSI above 70. So I'm here to help, and I want to help. My students have enjoyed a good year, my clients, and I appreciate the opportunity to serve them, and I will be here to help others too. But it's a game, and you have to learn the rules. And with the rules, you learn discipline, you learn patience, and it builds your confidence to make the trade. Some people say, I understand, what the market's doing, but I'm afraid. I said, well, then you haven't paper traded it, or you haven't written down in a journal. Buy yourself a journal for Christmas and write down why you're making a trade before you make it. And if it works out, then put a gold star next to it. If it doesn't work out, put a red star so that you learn not to make that mistake again. But I'm going into now 43 years of doing this. And it still comes down to methodology, patience, and discipline, and the mindset of a trader. Learn to trust your work, learn to have the charts show you what you should be doing. Don't be listening to everybody. I know people that follow 10 different advisors. I say, how do you ever make a decision? He said, well, I wait till 7 of them are pointing in the same direction. I said, oh. He said, how do you do it? I said, I look at a chart until the chart tells me it's ready to make a move. But all in all, the markets will show you what they want to do. That's why I developed my range rules, and on my website, I talk about the range rules. I talk about how to identify a trend first. When you think you've identified the trend, don't ask yourself, how many should I buy? Ask yourself, well, where do I place my stop? Defense is more important than offense. The offense will take care of itself, but your risk factor is going to be based on what you've learned, what you've experienced, and what you know, and how you feel. So it's interesting to trade markets. It's exciting, but you must have discipline. You must have the patience for the markets and your indicators to tell you what to do. And when I look at that, I'm really watching the dollar too, because the dollar's been very strong all year, but it may be nearing the end. And December is a month where we sometimes see reversals in currencies. And towards the end of the year, I start watching for those reversals in the currencies and the dollar. We're still in a bull mode on gold. It's had a correction, but I think by February, we're going to be back up at much higher levels than we are now. The gold just seems to have gone sideways for a while, but the normal seasonal low is usually in October. And back in it's August. Back in September, October, we made a low in here and started up. Now we've pulled back a little bit. I'm watching for this to turn up and go up into mid-February. So I can see that the charts are already showing us the inflation's they're no longer using the word transitory. Inflation is catching hold, and it's going to be spreading. So protect yourself, protect your profits. You might even want to consider just taking everything off. Where you have no trades over the holiday, enjoy the holiday with your family, and then regroup and prepare for next year. Look at what you did right, look at what you did wrong, figure out what you need to relearn, and make sure you go into January to start the new year, because there's a lot of markets that are very interesting inflection points. that could change direction and set up for some pretty big trades next year. And with that being said, I wish everyone a happy new year, a happy holiday, stay safe, keep your family safe, and we'll see you next time. Take care.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.